Hey there, so you're looking to move to the Colleen, Texas area? Well, give us a call whether you're moving in 9 days or 9 months. Shoot us a message or send us an email so that we can help you make that smooth move here to the Central Texas market. Hey there again, my name is Jacob Martinez with the Maverick Group, and we're gonna get after it right now. Hey there. So if this is the first time to the channel, make sure you like, subscribe, and hit the notification bells so that you can be notified about everything that's happening here in the Colleen, Texas area. Thanks for watching and thanks for tuning in. And today we're gonna talk about finances. Now, before we get started, I have to do a disclaimer. I am not an attorney. I am not a financial counselor. I am not a CPA or an accountant or a lender, okay? But because of my experience of helping out so many clients, I'm just gonna give you some quick tips about finances whenever you're looking to purchase your home, okay? So tip number one when looking for a home is your credit, okay? Tip number one is credit, okay? So whenever you're gonna buy a property, unless you're buying cash, okay? If you have the cash and you buy a property, then this is not gonna be applicable to you because you're gonna buy the house, it's gonna be free and clear, you do not need to get a loan. But if you're like the vast majority of buyers and you're gonna try to qualify for a loan, whether it be FHA, conventional, USDA, but there's a good thing for VA, here's a clause. And if you're getting a VA loan, no credit is required, okay, for you to be able to get a VA loan. Now, VA loan is for any military branch, Navy, Marines, Army, okay? So if you're in the military, VA loan would be the way to go, okay? So if you're gonna get a house, and let's say if you're gonna get a home, you wanna purchase your home with your family, and you're not with the military and you can't get a VA loan, well then you're gonna have to get an FHA or you're gonna have to get a conventional loan, right? So what happens? The lender that you're gonna talk to, whether it's from your local agent that helps you find a lender or if you just walk into a bank and talk to somebody, what they're gonna look at are gonna be, one, your credit. So you have to make sure that your credit is satisfactory. You normally want to get that taken care of and you want to stay above a 620, but definitely if you're 660, 680 above, that's even great, okay? And they're gonna look at your history. So they're gonna look if you owe any credit cards, they're gonna look if you were ever evicted or if you ever had a bankruptcy or if you ever had a foreclosure. The lender's gonna look at all this, guys. So if your credit is kind of ruined because of past events that happened in your life, before you go out there to try to apply for a home loan, you're definitely gonna have to try to make it work with your credit situation so that you can pay that off. Especially if you have a lot of credit card debt, that happens a lot too. You know, sometimes divorces get messy and your credit's also affected. Sometimes, you know, people go through situations, they lose their house, foreclosure. Whatever the case may be, whatever the situation may be, in that case, you're definitely gonna have to fix your credit. Number two, besides the lender looking at your credit, they're also gonna look at your income. So what they're gonna do is they're gonna weigh how much debt you have and how much money is coming in. So how much money is coming in versus how much money is going out, okay? And if you have, let's say you have a $40,000 annual salary, but your debts are $70,000 because you have paid student loans, back payments on car loans, whatever the case may be, then unfortunately, I'm gonna be very blunt, you're not gonna get approved, okay? But let's say you have $40,000 annual check, and your existing bills are usually a rent, you're renting, and they're very minimal, and it calculates that you can purchase, well then the lender will then give you according to your salary what you can afford, right? And that's just an example, guys, of $40,000, just because that's kind of the general gist or the general income for most people here in Copper's Cove, Colleen, Temple, you know, anywhere from 40 to 60K a year. But obviously, depending on where your situation is, your lender's gonna weigh the balance, and they're gonna see how much risk tolerance they'll be able to do with you as a lendee. And then what happens is they will approve you. And number 3, the pre-approval. So we've already looked at the first two when it considers finances, your credit, your income, and now the pre-approval. So there's a difference between pre-approval and pre-qualification, okay? The pre-qualification is pretty much information that you give the lender just based off of usually verbal, right? I make so much a year, this and that, blah, blah, blah. Sometimes they do ask for certain documentations, but they don't really go in depth. So they give you this letter, and you can go out there with your agent, your realtor, and start looking for your home. A pre-approval, however, is once you're really serious about buying a property, right? And then you're saying, hey, I want to be pre-approved. Now they're going to start looking at all your documentation, right? Whether you have retirement accounts like a 401k, a Roth, savings, what your spending habits are, and all this other stuff, right? And they're gonna look at that according to your finances and your credit. And so as soon as they start going a little bit more deeper, the moment that the bank feels that you can be a good borrower for them, right? You being the lendee, the person that's getting the loan, then what they're gonna do is they're gonna give you an amount that you are pre-approved for according to your credit and according to your income, okay? Now, the similarities between both is that once you receive it, you can start going out there looking for the home that you would like to purchase, but the vast difference is that a pre-approval is a little bit more ironclad in the eyes of the seller, right? Because now you have gone through all the minutia of handing all your paperwork and all your documentation. And if you go out there and you submit an offer, and let's say there's 2 offers, let's just say on the home that you want to buy, and theirs is a pre-qualification and yours is a pre-approval, the chances of you getting that property is higher than the pre-qualification, because a pre-qualification pretty much just lets everyone know that yes, you're talking to the bank, but you still haven't submitted all the proper documentation, so it's not as solid as a pre-approval. You are able to look at a property, but it's just not solid, because then the lender can come back and dwindle your loan amount. Let's say you got pre-approved, let's just say you got pre-approved for $100,000, and then once you got pre-qualified, for $100,000, and then things happened along the way, you inquired a little bit more debt or whatever the case may be, then when it comes to the pre-approval, once they start looking at all your finances more in depth, it could be that you may only qualify for $90,000, right? So that's the difference. A pre-approval, you pretty much go through everything up front, and then you are pretty much guaranteed, unless you make a bonehead mistake and get yourself into more debt or do something crazy, then you're pretty much guaranteed from that lender that you can get that amount. So in the eyes of the consumer, or the eyes of the seller out there, your offer will definitely look a lot more solid. So guys, these are just 3 quick tips, right? Whenever you're looking for your home, you want to look at your finances. And again, let's recap credit. Make sure your credit's good, or at least that you're working on your credit. Your income, make sure that you have more money coming in than you have money going out. And make sure that if you really want to clinch that deal, that house that you've been yearning and looking for, and you finally found it, make sure you get pre-approved. And again, if you guys decide to work with us because you're moving here to the area, we have lenders in place, okay, that will definitely look at your situation, whether it's FHA, VA, conventional, USDA, it doesn't matter. we have lenders that we work with that will definitely help you out. Well, then again, thank you guys for tuning in. If you have any questions or any comments, whether they're good, bad, or ugly, leave them below. All our information is below, and we'll talk to y'all soon. Take care.